10 seconds.
Good morning from Chicago traders. It is 8 a.m. on the dot here in Chicago on Tuesday, the 25th of July, 2023. Thanks for joining me today. This is episode number 2509. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Sorry, I had the news feed coming through at the same time and broadcasting. Shut that off just now. Still struggling a little bit. I have not fully recovered. But I'm pushing through here just to stay abreast of what the market's doing. This is a very important week, and I don't want to be out this week. So just kind of showing up every day and being here every day. So here we are. So here's the Convergent Trading pre-market summary sheet. While we're at this, I want to remind you that there is a sale currently going on for Convergent Trading on for new and returning members, 20% by the end of the month. Just part of the summer sale when things are slow to ramp up for the September and October more volatile seasons. So that's going on today. Here's some information on that. You can get details by pointing your browser to go to ct.pro, ct.pro/summer20. If you want more information on that, you can go grab that from that website. But for now, let's look at what the market is doing. We are opening really mixed. The Nasdaq has popped a little bit higher. We did have a few earnings this morning that came across. We got GM, GE, Verizon. Just to run through those real quick. We also got Unilever out of Europe. The Unilever is represented in the FTSE 100. It came out much earlier today at 1 Central, 2 Eastern. But that's the effect on the European market. The main things that came across is the German IFO's lower than expected German IFO business climate for July new came in at 87.3, was expected at 88. German IFO expectations new for July came in at 83.5 versus 83, beating slightly. And then current conditions came in at 91.3 versus the 93 expected. Following that, we got Dow reporting at 5 a.m. Central, 6 a.m. Eastern, came in at 75 cents versus 70 cents. Spotify, which is not major, but General Electric is with revenue of $15 billion, came in at 68 cents versus 46, beating dramatically for such a huge company. General Motors came in at $1.91 versus $1.85, also positive. Verizon came in at $1.21 versus the expected $1.16. It is confident it'll be achieving fiscal year targets and has set forward-looking EPS to $4.55 to $4.85, increasing the $4.68 before that. And since then we've had USK Schiller and so on and so forth. So really the focus remains the same. Did I not say the disclosure? Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So the earnings remain top of mind. And are you guys still hearing the news feed? I hope not. So earnings remain top of mind. We do have the FOMC rate decision tomorrow. And again, a reminder, tomorrow FOMC, Thursday ECB, Friday Bank of Japan, all major players. And that's what's on deck. So it's really important to stay abreast of what's going on. And then today, after the close today, we have our majors coming across. We have Alphabet, Microsoft, LVMH, Chubb, Visa, and so on. Alphabet, Microsoft, huge representations within the Nasdaq and the S&P. So those are likely to shift us along. Looking at the S&P now, the S&P overall, the action is pretty balanced. From what I see here, the action is pretty balanced. The profile is quite stocky this morning. It looks like we're battling across a range, and we've only done 126,000 contracts so far, which is pretty low. The inventory is 40% long, and the range is relatively smaller than what we've seen over the last few sessions at this time of day at 13.5 points. Point of control 45.85, basically in line with where we were yesterday, pretty much in the overnight session. Looking across the commodity complex, you know, the crude oils had quite a run here, expected. We talked about this last week, that if it holds a 74, it is likely to run through the 77 into 78. So crude's kind of chugging along. Copper's taking a bit of a pop today, but copper overall, if you look at copper futures, I was looking at it this morning, it's kind of middle of the pack here. You can see that the long-term picture on that profile, copper overall, trading commonly at $3, is a little bit higher, and it's been higher since the pandemic. And when China shut down and remained shut down, it kind of pulled back a little bit, but it's been sitting sideways. Although it's popping higher this morning, it really overall isn't going anywhere at the moment. Copper tends to be an indicator of growth, really. Copper is one of those elements that we have that goes into pretty much everything we produce, be it homes or electronics or airplanes or cars or whatever. Copper's involved. So that's where that stands. Bitcoin and Ether have come off over the last few days, have come off a little bit, and that's that. So what's on deck, or what's ahead of us? Consumer confidence at 10, Richmond Fed. Those are all both low-tier numbers. 5-year auction, 43 billion at 1 o'clock. Not likely to be a mover. And then we have the inflation rate out of Australia this evening. Let's take a look at what we've got in the bigger picture. Here's where the S&P is. In fact, I want to use this chart here. I keep this up all day. That that crazy sun-looking profile on the right, it almost looks like the S&P is Icarus coming close to the sun here. This profile on the right is actually an aggregate, is a composite, and you could see the dots for the composite. There's one here and there's one there. So what I've done here, because we've pushed last week on Tuesday, had the big push higher, which really is governing the auction currently, has squeezed up to Wednesday. Thursday took that back. Friday inside day, and then that leads us to yesterday right in here. So if we follow along, let's reduce this. If we follow along here, we'll see that there was no balance on this last Tuesday rally day. We have balance on Wednesday. We have lower balance on Thursday, lower balance on Friday, higher balance yesterday. And taking all of these, because they have overlapped, we have a composite. Now we're looking at a composite. The composite has given us the 45.77. Okay, 45.77. Wow, that's an awful 45.70. I got to redo it. I'm not a perfectionist, but man, that was really bad. 45.77, as the MC point of control in this region. We're currently trading 82, 81. That's 5 points higher. The limits around this range are in the, if you're part of Convergent, actually I posted this 4K image. The limit is right here at about 92, in the 92 area, down into the 63 area. This right here is your balance range. We're again 82, we're in the middle of this balance range. So even though yesterday put in a higher low, which is important, so we put in a low, now we might trigger one-time framing, and yesterday triggered one-time framing up. So this is your pivot day, this is your confirmation day, this is one-time framing taking place. We have a higher low, higher high, but it's still contained. We're still trading inside of last Thursday's selling range. Okay, so overall the market is still in a holding pattern. We're still kind of circling our target, and there's no indication that there's anything new to price in. We do have a few things after the close that we're very, very likely to price in pretty aggressively. Microsoft is huge, and so is Alphabet, of course, Google. And here we are opening right on top of the MC point of control, right underneath yesterday's point of control, right underneath yesterday's settle. And so again, just like yesterday, we expect that it is very likely to be a chop zone as we open up. So if we look at yesterday's action, I'm going to split this profile here. A very important feature of profiling, to split the profile. And I'm going to take a couple minutes here to go over with you what this profile said yesterday. It had a relatively aggressive, if you recall yesterday, I said, look, sit on your hands until the high at 84 or the low from Friday is broken. Once that's broken, we may establish a trend. And here's how we know when the trend has been established. So A bracket was the initial balance. This is pretty aggressive. This is basically within the first half hour, participants explored the entire range of the market on open trade. Okay, the second bracket, bracket B, so bracket A, each bracket's 30 minutes, bracket A, B, C, D, E, right? The second bracket is an inside bracket. This really deserves attention because we want to see, we know there's compression going on, we want to see how it breaks. Bracket C has a range extension on bracket B. So now if we are looking to take a trade, so we've broken the high in bracket A, bracket B held that high, was an inside bracket, so now we're looking for the break of the bracket, and this is our first indication. So we had to wait a whole hour. Remember, I talked quite a bit about patience yesterday. We had to wait a whole hour to determine what the most likely trend is, and so we get bracket C with the range extension. From here on out, we look at, should I buy? So these are your two options. Should I buy? Or three options. Sit on hands or sell. I don't care what you're trading, where you're trading it, what the instrument is. These are your three options. That's it. In every time frame, scalper, structured intraday trader, swing trader, investor, doesn't matter. You can either buy, sit on your hands, or sell. And as soon as the third bracket breaks the second bracket, the sell gets crossed, and you're left with these two options. So all of a sudden, you have a much clearer picture as to what to do. Now, bracket C, when we look at bracket C, which is which starts an hour after the open and goes on for the a half hour after that, bracket C is where we start to now stock for entries. How do we stock for entries? We move into our shorter time frame charts, and then we're looking for intraday. So bracket C, if we look at the ES, bracket C started right here. This is your bracket C. It kicked in. This is where the IB is, right here. This is the IB being done. So now bracket C is saying, hey, we're looking for long trades. What do we have? What conditions do we have? We have a market that's above the full session intraday VWAP, full session, and intraday mid. So now we're trading off of the day generated levels. The first opportunity for that is right here. We're looking for the IB stat in that situation. That gives you this tag, higher low. There was a collision here, by the way, higher low. And all of a sudden you can take the breakout or the higher low pullback pin right here for the long, targeting the IB high, pulls back, secondary for a further push, and so on and so forth until the bracket gets broken to the downside. We're only trading long. I am basically telling you here the setups that I'm looking at and how I'm trading. Okay, I'm explaining it as clearly as I can, but until we have these brackets kind of falling apart, we're trading from one direction. So C bracket, higher low, extension. D bracket, look at D bracket. It pulls all the way back down to C bracket's low, extension higher. We're still looking to the long side. E bracket's now giving us a warning. We have an inside bracket. This is a warning. F bracket breaks and extends higher, and then G bracket ends it. So as soon as F bracket is done, we are now back to having the buy, sit on hand, sell kind of. We fall back into that. Okay, so this is what we had yesterday, and it's a mess. It's a bit of a mess, and we ended up finishing right on top of the point of control. We ended up finishing right on top of the high of Friday, and then this morning we're opening down here. Okay, so this has the potential for a gap to settle trade this morning. It's an internal trade. We're opening inside of the prior range. We're opening inside of the volume value as well as the TPO value, which is right there. This is a pretty nasty, or not nasty, but a pretty clear indication that we are likely to just trade both ways as we sit here. I don't know if I can make it clearer than that. If you have questions and so forth, please, hit us up in the trade talk today at Convergent Trading. That'll be at 1 o'clock, and I can go through this in a little bit more detail. But I wanted to kind of explain how it is really important to keep the big picture in mind, as opposed to what I see a lot of people doing, which is to go to these order flow platforms and go just, pardon the term, and hopefully no kids are around, to go ape shit, like trading both sides of the market. It's nonsense. The market is in balance. We are opening dead nuts on top of this balance. We are opening on top of yesterday's balance. Yes, we trended up a little bit yesterday, but in general, we are trading balance here. So take it easy. Take it easy. It's the middle of summer, huge week. We are going to get repricing this week, but don't get carried away. The Nasdaq is giving us a whole different story. Okay, look at the Nasdaq. While the S&P is sitting here inside of last Thursday's range, inside of this day's range. So Thursday, the S&P had a big multi-distribution day with poor structure. The next day, it pushed a lot higher. That was Wednesday. Thursday, it took back a portion of Tuesday, and then Friday was inside of Thursday's range, still trading up here in the 15,850 area equivalent. And then yesterday, the S&P put in a higher high, higher low, and it took out the equivalent of this 15,895 high. Look at where the Nasdaq is, so you can see the Nasdaq is relatively weaker. Yesterday, the S&P built a profile that looked something like this. And the Nasdaq is building a profile that's much lower and is actually inverted. This makes it especially difficult to get continuation on trades, because a lot of the Nasdaq's largest components are reflected in the S&P, but not to as great an extent as the Nasdaq has. You know, the value of Microsoft, Google, and so on, and the Nasdaq are much higher than the S&P, quite a bit higher than the S&P, in some cases by 50% or more. And the Nasdaq is one time framing down. Boom, boom, lower high, one time framing down. So if you're looking at the Nasdaq versus the S&P, you are lost these days. The spread between these two products is shifting dramatically. The Nasdaq, nice little distribution on top of Fridays, lots of collisions. You can see these big dots on here, lots of collisions, pretty tight, very, very tight value area. TPO and volume value areas on top of each other, and it's trading a little bit higher. The Nasdaq's likely to see an attraction back into the POC and down into 15,561 as well as 15,551. So 61 to 51 is the most likely test early on, which will likely happen quickly. The Nasdaq, you have to monitor that high. Very important, this 15,618, 19, the 619 area, very important, because if the Nasdaq takes that out, it is likely to push into the tail from last Friday, which will likely bring us to 719 very quickly and back into balance here at the 750 area. Okay, so the Nasdaq has a very, very different view than the S&P does. The Nasdaq is skewed downwards. Okay, so anyway, I've said a lot here. Hopefully you're able to follow along. This is really important stuff, in my opinion. You know, having the bigger picture and understanding what the market is doing in the bigger picture is really key. Looking at the NQ on the overnight session here, you could see the NQ has really done a great job holding these day generated levels, full session VWAP, full session mid, and has established a point of control at the upper end of the range. However, the Nasdaq has a multi-distribution profile here, and it's you know, starting to fall through. So this is likely to be a very noisy open this morning in the NQ. So in this same vein, the NQ is facilitating trade to the downside much more easily than it is to the upside. Again, here's the bigger picture. Okay, so it's facilitating trade to the downside much more easily than to the upside. The NQ has a fair amount of resistance up above, and it's likely to want to push down into the open and come back into, because it's opening right on the edge of the value area. The first trade is likely to be short today in the NQ. Okay, so does that make sense to you guys? I mean, am I just kind of, I know I'm diving pretty deep for a trader bite, but the point being, make sure you understand what you're waiting for. Make sure you have a plan. Make sure you understand what the auction is saying. All this other stuff, fibs, moving average crossovers, order flow, all of that is derived from what we just discussed, the auction. You can turn to that stuff as a way of entry, but the plan has to come from the auction. The plan has to come from the auction. Here's crude. Crude is a runner It is a runaway freight train here. Crude beautifully tested into the 77, beautifully pulled back to the 74. We talked about this. If it pulls back to the 74 and turns up, it is likely to tackle 78, which it did yesterday, and now crude is heading into the 80. As long as crude maintains the prior lows, you're more likely to see it being bought on every pullback. So fade the lows until they're broken is the plan for crude. 77, really important here. You see this line here? This is your line in the sand in crude. You could see the profile kind of fall off at 77.09 there, 77.10. As long as it holds that, we're heading towards the 80, in my opinion. Good luck, and I'll catch you tomorrow. Again, don't forget the sale for Convergent trading ends at the end of this month. If you want to kind of dig in a little bit deeper, that's the place to do it. Good luck.
COSM Cosmos Health provides update on recent developments, maintains strong financial position, reaffirms commitment to growth, and highlights CEO's continued investment exceeding $15 million. And that's Charlie Oscar Sandy Michael, COSM.